Welcome to the Money Desk. I'm Heidi Jokos. Now, Capitec today released its latest financial results for the 6 months to end August. While it reported a greater interim profit and hike its payout to investors, it had to substantially increase its credit impairments. This, as there is a risk of more customers defaulting on their loans. For more on this, let's talk to Capitec CEO Gerrie Fourie. Thank you so much for your time, Gerrie. We do appreciate it. Let's talk about your results. Your headline earnings per share grew by nearly 9%. That is good news for shareholders, isn't it?
Yeah, I think it's a good performance. If you look at GDP is growing below 1%, inflation is at about below 5%. So I think 9% is a very good performance. I think if you look at the performance, there's two areas to it. It clearly shows how we diversified our income, and that we're getting now 50% of our income from other streams, and that's other products like our value-added services, Connect, Capitec Pay, transactional income, and then insurance. And then there's the impairment side, I think, which everyone highlights. We're very much the same as all other financial institutions. The economy is under pressure. We've cut back, and I think we've managed it. We're seeing early signs of positive news on it, but one will have to monitor it in the next 2-3 months to see where we're going.
Absolutely. Let's speak about those credit impairments, which is a provision for bad debts and has been upped by nearly 2/3. This obviously speaks to the pressure on South Africans, doesn't it?
Yeah, I think one needs to understand that we've gone through a very abnormal period. Interest rates has increased with 2.75%, but interest rates are now exactly the same as what they were pre-COVID. I think the biggest adjustment is that the salaries hasn't been adjusted in line with inflation. You didn't have overtime and bonuses being paid out. That was cut back because of companies not performing. And then a very high increase in inflation, especially food inflation. And I think that had a big impact on the consumer itself.
Certainly, and Capitec has increased its customer base, which is good news, by over 1 million clients, taking into account the tough economic times that you have mentioned. How are you adapting to suit your clients?
Well, I think if you look at our client base, it's grown with 2 million clients per year for the last 5 years. So we now have 21 million clients. There's 7.5 million clients that we call fully banked clients. That's clients that's banking with ourselves, and that's the area that we're focusing on, as well as our digital side. We've got 11 million clients on digital. I think what we've done in the last 4 or 5 years is just adding more value-added services to our client base and making certain they're getting that value. And if I look at our pricing on our digital side and on our transactional side, we haven't increased prices at all for the last 5 years, and that's just showing how we create value to our client base.
Certainly, and let's quickly speak about your insurance business, which was added this year, and that also seems to be doing rather well.
Yeah, it's not been added. We've always had insurance, we always had credit life, and we've always had funeral for the last 4 or 5 years. What we've done is that we have applied for a long-term license. We got approval last year, and we're now busy migrating it away from a cell into our own license. So that's a 1 to 2 year process, and we've started with that process, and we're comfortable where it is. We had a very strong performance in our insurance side, so we're happy with that.
Okay, fantastic. Thank you so much for your time this evening. We do appreciate it. That was Gerrie Fourie, who is the CEO of Capitec.